Hello friends, welcome to my channel and thanks for watching this video. And as we have already crossed Friday, so welcome to another session of USA Weekly Market Report. Now, the overall week has been very good, the past 1 week, but you need to approach this past 5 days price action along with the past 1 year's 1 month worth of move, because we have seen a substantial amount of volatility that we have seen in the market, and it is probably going to continue going forward. So, if you are thinking that there will be a one sided move, so you need to, or one need to wait and watch for that, because there are some crazy things that are going on in the market. So, let's see. So, after the USA, this payroll number, so this makes the market very volatile. As you can see, the non-farm payroll increased by 194,000 in September compared with the Dow Jones estimate of 500,000. So this is a substantial amount of drop. So the unemployment rate dropped to 4.8%, which is better than expected. But if you go through this number, that the US economy created job at a much slower than expected pace in September, a pessimistic sign about the state of the economy, though the total was held back substantially by a sharp drop in government employment. Okay, so as you can see here, this has been lower in the past couple of months, and from the highs of 4.8 million in the month of June 2020, we are standing at September 2021, which is saying 194,000. Apart from that, the things which you need to look at, which people, we need to remind everybody time after time, look at oil, because we are approaching towards winter. Then we have bonds, which is trading substantially higher. And one thing which one need to understand, that previously it went up to nearly, I think, 1.8. So whether the market has already factored in $1.8, because it has again started moving towards the upper end of the range. All right. Apart from that, what we have here is let me so this Evergrande thing. Now the Evergrande thing, let me tell you, is very much pertinent, and the spillover impact has already been started. If you are not covering this news, you should started cover the news. So let me show it to you what's happening over here. The recent press release. So as you can see, Evergrande creditors fear imminent default as concern shakes sector. So what we have here, the offshore bondholders are concerned that it is closing to defaulting on debt payments, and want more information and transparency from the cash-strapped property developer, their advisors said. And rest of the things are fine. So this situation is, and this is not about uh, this is not only about Evergrande, because the bond prices has already been risen very much on the upside, so there is a significant amount of rise. You better read this article. This is not only for how the market is going to move, but as a part of information if you are a financial market participant. Now there is another press release by JP Morgan, which is saying that Evergrande and other Chinese builders have sizable off balance sheet debt. So investment bank JP Morgan have estimated that the troubled Chinese property giant and many of its major rivals have billions of dollars worth of off balance sheet that once added on to leverage of the to ramp up the leverage ratio. So this is what we are saying. What we are looking at is just the tip of the iceberg, because there are lot and lot which is underneath. So you need to be very much cautious, and this is not going to be a one-way ride, and this we will definitely have some turbulent times going forward. Now apart from this, now everybody is talking about this $1 trillion coin, of platinum coin. Now this idea looks, this is out of the box. It is actually, when I'm saying out of the box, it is literally out of the box, because you cannot mint a coin of a platinum which cost a couple of $1,000 and tell people that consider this as a $1 trillion coin. So you can't do that, because there will be a significant impact on the currency, and the dollar will thrash like anything. And at the same time, you will see the bond yields are going to spike more higher, or much more higher on the upside. So there will be a two-way consequences for these kind of ideas. I mean, you can do whatever you want to do, but when you have uh, impact on other people's life, you should be, or you must be very much careful about it. So on the backdrop of all this important news, we are now approaching to the main section, where we are going to analyze, reanalyze, and see how the next week is going to shape up for the US market. So as you can see, nasdaq is on the uh, lower side, because we have seen that it is now underperforming. Nasdaq is clearly underperforming, even though the Dow Jones has been a range bound one. So the Nasdaq is underperforming, and similar impact we do, because there is hardly any impact on S&P 500. And on top of that, as we have already discussed, oil is going up. We have a 10-year yield which has moved significantly on the upside. The VIX, although went down, that's a good sign, but 18 is giving you a hell lot of volatility. Apart from this, you can see all the major prices are on the upside, and treasury bonds. So if you're looking at 1 year, 2 year, 5 year, 10 year, 30 years, everything went up. And this US dollar index, which is standing strong, or very strong, at 94.1. And as you can see, now this is a 1 day move. Let me show it to you. So there is a sharp drop, there is a very sharp drop after the payroll number that the currency has shown. So it went down to somewhere like this, 94 or even 93. Then it started moving on the upside, but overall it is holding 94. So that's the important thing. So let's now directly go to the chart, and let's see what's happening over here. So the strongest and the mighty one is Dow Jones for the time being. Now the important thing to look here is, even though the prices are rising, the momentum, if you're looking at the indicators, you will see that the momentum is slowing down. There is a clear sign that the momentum is slowing down, as you can see here. Okay, or even here we are. So when we have these kind of indications, price sometimes fizzles out. The price move which we can see right now. So you need to be very much cautious, and because we are approaching the result season. So let me zoom this chart a bit. Now as you can see over here, how the price action looks like. So what we have in terms of price action, so what we have, 35,114 and 35,647 as our target, or you may consider this as your resistance. On the downside, you have 33,776 and you have 33,522. this is your support. So this is the range in between which we are looking at, and both the possibility exist. And technically this index has been moving below, there is only one support right now, which is 20-day moving average. It is nearly at 34,460, and if it doesn't hold, the next support which we have here is 33,487 or 490. So there is a range. I don't want to go beyond the range for the time being, because it even requires everybody to just wait and watch and what's going to happen. If there is a further breakout and this is just a time consolidation, we will get to know. But if there is something else apart from this, that we need to observe. Now let's go to the chart of nasdaq and let's see what's happening over here. So this is the chart of nasdaq, and as I told you, the Dow Jones looks consolidating, but the nasdaq has some bigger swings, obviously, because the volatility, or this is a high beta index, so the volatility is going to be much higher when compared to index, which we can call it as a Dow Jones. So the levels that we are going to look at will be something like this. So this is the trend, okay, this is the zone which you may look at. So the way it is moving, it looks like it is approaching towards 14,249 again, but the 200-day moving average is at 14,000. So there is a possibility of 14,000 going forward, and this is very much there. And if 14,250 holds, then the upper end of the range will be 15,700 and 15,900. But that we have to actually reanalyze and see what's happening over here. Now the important thing, the most important thing, is US 10-year, because nobody is talking about 2-year or 30-year, but 10-year is something which is moving according to its individual strength, and we have seen it is moving towards the upper end of the range, and this is what we can see. And the way it is moving, it will definitely approach the previous high of 1.79 or 1.8. okay, so the way the 10-year bond yield looks like is 1.57 as your support, or you may consider as your stop loss, and on the upside you have 1.7 and 1.78, right? But if you want to draw a swinging chart out of it, so what's the swing, or where is the swing? So this is what you can see as your support level, and the target which you may consider for the time being will push the the way things are going on. If there is a rise beyond 1.8, there is a possibility of 3% as well. Okay, so this is all about a technical and chart, because there are lots of things that are involved. But the way it is moving, it looks like a normal stock which is trading, or a high volatility stock. So this does not look like a chart of a bond yield, because we have very low volatility. These are low volatility kind of thing, but the beta has already increased. So you must be very much watchful about how it is going to move going forward. Okay, and talking about the dollar index, let me show you the dollar index as well. So it is actually holding or sustaining above 94. So that is a sign of worry, because the breakout has already happened over here, and it completely depends upon the kind of policies that the central bank and authorities will make. So 93.5 was your resistance level, and now dollar index is sustaining at 94. So the next two resistance that we're going to look at will be 94.3, which it has already seen, and then 94.73. If the dollar index started trading above 94 4.73 or 94.8 in a shorter term time frame, then there is a very high probability that it will move towards 97 or 98. So there are some indications which are saying something else. Now it is the time to observe, and if you want to build position or number of positions, you need to be very much specific about what you are buying, why you are buying, and what's your intention behind that. Most importantly, if you have already decided to buy, use the SIP way. You know, invest in tranches. Don't go all in. More specifically, if you are looking for an investment, because the way the market has shaped up, it will give you ample amount of opportunity. Because if you are not looking for some sort of trading, then you need to understand that this is a long term play, and the market is actually not saying something, at least in the near term, or giving some sort of indication that everything has played out. And we need to be very much watchful about this particular result season, because the way the commodity prices went up, you will probably see lots and lots of surprises for most of the sectors, excluding some of the sectors which are not bounded by commodities, but most of which are. So you will see some sort of surprises going forward. So this is the end of the video. If you like this content, do share your thoughts in the comment section and subscribe my channel. Lastly, take care of your family and friends.